Hey, what's going on, CBF crew? This is Dan Plata, CEO of Blue Sky Services, and this is a CBF specific video on how to use our CBF specific target budget for 2021. So, Debbie and I worked on building a chart of accounts specifically for the CBF model. You may have seen that already. And one thing I've been working on the last few months is building out a budget specific to each line item of that chart of accounts and what roughly your expense as a percent of revenue should be for each of those things. So I've built you all a target budget sheet based on the CBF business model that you can use for 2021. It's all pre-built for you. It does have room for you to customize it either by your own percentages of what you believe is going to happen in your business next year, and your own dollar amounts of what you believe is going to happen in your business next year. And I'll show you how to use that. And so basically all you got to do is enter your sales in, and then it fills the rest out. It does have the optionality to really dive into sales and marketing and build up your sales budget based on how much you're going to spend on marketing, based on repeat rates, acquisition costs, attrition if you're going to lose clients, which we're all going to lose clients obviously here or there, and then skip rate, so you can really nerd out on that if you want to. There will be a separate video on how to do that. That's not a CBF specific thing, but I do have a video for it that you can get on our website. There's also a payroll tab to get very precise on how you pay your employees. There's also an asset and liability tab to get really precise on anything you own that's on your balance sheet or owe that's on your balance sheet, and how that impacts your P&L and your balance sheet and your cash flows. So this video is going to be more of the intro, how to just use the budget sheet in the main tab of it. There's separate videos that you can go watch if you do want to dive into the sales and marketing tab, which I highly recommend. Even if you're not going to use it, you can fill it out and not use it. There's a way to toggle that on and off. The payroll tab is super useful. The assets and liabilities tab is super useful. So if you want to like super dive in, go watch those videos, put those tabs to use. In this video, I'm just going to talk through kind of the overall business model and how to use the budget sheet. So I am going to share my screen here. Whoop. And here's our CBF target budget. So I'm just going to kind of work top to bottom to try to explain how to use it, how to do the different overrides and so forth, and where to punch stuff in as you go to see how you're doing. So foremost, right at the top, I just want to point out there's a row here for business days. And I think this is super useful because I hear people get tied up in like, oh, my business was way down this month versus last month, or way up and I'm crushing it. And a lot of times those movements just have to do with the fact that some months have more days in them. So for instance, March this coming year has 23 business days for us to go out and produce revenue versus February has 20. So that's a 15% increase in the number of days we have, and a 15% increase in the amount of chances we have to go earn revenue. So naturally, we're going to see a big swing in revenue, even if we're not selling any new clients. And I think that's just always important to keep in the back of your mind. You can see in the sales section here, I actually do have more money in March for that reason. And I just manually typed this in for now. The other thing to always keep note of, some months, and if we're talking CBF business model, you're probably paying weekly. And if you're paying weekly, there's going to be months where you pay where you run payroll 4 times, and there's going to be a few months where you run payroll 5 times. And those 5 payroll months it's really hard to make money. I'll actually show you as we go through this. Like, you pretty much plan on not making money in a 5 payroll month. You make all your money in the 4 payroll months. And I'll show you why that is. But for instance, April is 5 payrolls, July is 5 payrolls, September is 5, and December is 5. So we have 4 different months of the 12 months where you're not going to make any money. That's totally okay. The business model still works. But always keep that in mind, is when those 5 payroll months hit, your wages, whether it's cost of goods sold wages or administrative wages, are going to be 25% higher. Just on average, if you go from 4 payrolls to 5 payrolls, you have a 25% increase in your wages. And this spreadsheet is built mathematically to handle that. So first thing that you do is you enter your monthly sales targets. I already mentioned this, but there's different tabs at the bottom where you can like really nerd out on these things. Sales and marketing would be one of them, where you would enter how much you're going to spend on different marketing things, what your acquisition cost is, how many clients you expect to get per dollars of marketing spend, what the average job size of those clients are, your attrition rate, how much you lose clients, the skip rate, how many people skip their cleaning this week and wait till the next one. So like all these things come into play. And if you fill that out, you can decide to use it. Or you can just fill it out for fun and not use it, but at least like go through the mathematics of it to see. The easy way to fill this out is literally just typing in what you expect to do in sales each month. So here you can see I just kind of kept it at 45,000 each month. And then I bumped it up to 50,000 when we've got like 22 or 23 days, just because we're going to do a little bit more in those months naturally, just because we have more days to go out and do work. If you want to use the sales and marketing tab, here's what it looks like. Don't like look all over here because it'll just feel complex without explanation. But the reason I'm showing you is if you wanted to use it, you simply go and toggle use, and then it's going to change this line to pull the sales in from that tab. So it's going to override what's manually entered here and bring in everything from the sales and marketing tab. And then that is going to drive all the rest of the percentages below. So again, you don't have to use that tab. It's there for you. Go check out the sales and marketing specific video for recurring style businesses. And that'll explain how to use that tab. For now, we're just going to go back to using the manual entry. You can see that I took that use off, and now it's just kind of back to using what we manually entered here. As we go down, there's a place for the budget, and then there's a section below it to enter the actuals. So here we're budgeting our sales, and then right below it, we enter our actual sales. And you'll notice right away, there's two different lines for entering sales. And for those that have seen us on Bookkeeping Beer and BS before, or that I do bookkeeping for, you know, we always grab both cash sales and accrual sales. And the difference between those cash sales is for tax purposes. That's the money you deposit in the bank. That's what the IRS cares about. Accrual sales are the sales of when you do the work and you invoice it. Now, if you collect, not cash per se, but if you collect payment immediately every time you do a job, it's never any different. You deposit it like right away. Job done, invoice, money deposited. Your cash sales and your accrual sales will be the same. If there's ever a lag between when that work is done and invoiced and when you put the money in the bank, these two numbers will be different. So don't expect them to be the same. The reason why we want both, cash is king, as they say, and we want to know for tax purposes what our cash flow looks like. However, when we look at all of our expenses, it's really the act of doing the work and invoicing it out that drives the expenses, not when we deposit the money in the bank. If we deposit the money in the bank 2 weeks later after we did the work, it was the work that we did that drove our expenses. And so when we look at all these percentages and how we budget them up, we're really looking at our invoiced accrual sales. So that's why we want to enter both. In general, your cash sales, you go get from QuickBooks. That's just going to be the sales deposits that you have. On the flip side, you get your accrual sales from your CRM as how much revenue you invoiced out that month. So I highly encourage you to go get both of those numbers every single month and know the difference between them. And it also helps you figure out if you have a cash collection issue. If you're doing a bunch of work, but the money's not getting into your bank account, that's a huge problem. So it's good to always kind of monitor both of those things and just make sure that you're collecting cash in an efficient manner. So now let's get into the meat and potatoes here of the budget. So in CBF, we know cost of goods sold equals the labor when we're out doing the work. And we know that's got to be 55%. And that's your fully loaded labor costs. That's the wages, that's the taxes, that's the workers' comp insurance. So we don't break out the payroll taxes necessarily from the wage itself. All collectively, what you're paying your employees should be 52.5% roughly, and workers' comp would be about 2.5%. That, it could be 53% and 2%. Depending on the state that you're in and how your workers' comp works. The big thing is you're shooting for 55% in this bucket in total. So one thing that you'll see right off the bat is on 4 payroll months, it's really 51%, not 55%. On a 5 payroll month, it's really like 63%. So again, that's what I was saying earlier, like don't get down when you miss this 55% in a 5 payroll month. You should miss it by about 8%. but don't be happy when you hit 55% in a 4 payroll month, because you really should have been closer to 50%. And so each month is going to be a little bit different, just purely based on how many payrolls hit. Also, a little bit based on the number of work days and just the lag of when the work gets done and then when you actually do make the payroll. But on average, if we like let this math work through, it should come out to 55% at the end of the year. Now, one thing that you'll see in here is because there's months where we do a little bit more revenue, like March, we said 50,000. All these budgets are based on this target percentage that we have in here. However, there is the ability to override it. So let's say your workers' comp is more like 1.5%, and you just know that. And so you're going to say, I can get up to 53.5% here and still be at 55% total in my budget. So I've got a little bit more room to work with on the cleaner wages. My workers' comp is a little bit lower. But then you look at it and you're like, well, I know my workers' comp bill is going to be the same every month. It's not going to be $675, and then $750. It's actually just $700 every single month, and I know that. So you can see I typed these percentages in, and it automatically overrode the target percentage. And now I can say for anything where it's like, I know how much I'm going to pay on that every single month. If you do the dollar override and type in, it's going to automatically override your percentage override. So it's kind of built in a stair-step fashion where the farther you go to the right, it overrides everything to the left of it. So you can manually override those things. And now if I just delete that 1.5, it's still stuck on the 700. If I delete that 700, it goes back to the target percentage. So that's how these columns work. These are for you to be able to customize specifically to how your business works within the CBF model. So that especially comes in handy when we look down farther at the necessary overhead costs. And some of those, just like workers' comp, might be, I know I pay this dollar amount for this thing every single month, and I'm going to budget that rather than just budgeting a percentage. So we've got our target percentages in there. We know we want to hit 55%. And then right below this section of cost of goods sold is a place to enter our actuals every month. So month is done, books are closed. You can come in here and just type in the actual dollar amounts from your P&L, and then it'll do some calculations for you. So let's say we had 20,000 in wages here, and let's say we did 47,000 in sales. And notice I put it in the accrual section there, actual invoice sales, because that's what's going to drive the percentages down here. To the right, you will see there is a section in here. I'm going to drag this down just to get this. I can't handle that reference line there. It didn't fix it yet. There we go. So you'll see we're at 43%. This 20,000 is 43% of the 47,000. We planned on being at 52.5% for that line item. So we're beating that by 9.9%. And it's also saying we're beating our workers' comp by 2.5% because we have $0 in there. So it's showing green here wherever we're beating our monthly target. Here's our monthly target, here's our actual, and this is calculating the variance between those things. And it's green if we're beating that target. These will go yellow if we're not beating it. So for instance, let's say we spent $5,000 on workers' comp. So now that says we're at 8.1%. We wanted to be at 2.5%. Or excuse me, we're at 11%. We wanted to be at 2.5%. So we missed by 8.1%. We're still in totality. We're at 53.2% versus 55. So we're still in the green. We're better than the total bucket 55% target. So this still shows green. However, if we spend 25,000 on wages, that's going to put us over the edge. We're slightly behind on wages. We're way behind on workers' comp. Maybe we've like paid a couple months worth because we were behind or something like that. And now it shows that we're 8.9% out of bounds, if you will. We're at 63.8% versus 55%. If we happen to be just off by there's a 2.5% threshold that we have built in here just to give us kind of the warning track or the stoplight effective. We're green if we beat it. If we miss it by less than 2.5%, it just kind of flags it yellow. So it's like, okay, keep an eye on it. We're at the warning track. And if we're just missing it all together by a long shot, it'll go red. So maybe if I'm at like 21,000, I'm just trying to get it to like go yellow here. So there we go. So we're at 55.3% compared to 55%. So now it colored it bright yellow. It kind of says like we're a little bit off, but we're less than 2.5% off. So it just triggers us to be like, pay attention to that. We're starting to get out of bounds. Got a lot of sports analogies going today. All right. Good enough. All right. So I'm going to clear those out. That is how those percentages work and help you stay dialed in to what you should be trying to achieve. Let's go down through each of these buckets here kind of one by one just to explain what's in them and look at the percentages. So after cost of goods sold, like we go out, we do a job, we pay for that labor to go do that work. Whatever's left is really kind of, I'll use the word discretionary for lack of a better word. After we pay the wages to go do that work, now we get to make decisions about how we're going to use that money, whether we're going to spend it on admin staff to handle incoming calls or to do bookkeeping for us or to do consulting for us or whatever it is. Marketing, we're going to pay for job supplies maybe or other job related costs. And then we've got some overhead costs in them that are sometimes discretionary and sometimes necessary. But from this point forward, like this is our gross profit. When you hear the term gross profit, this is what it is. It's after we go out and clean, we know we're going to keep 45% of that. We paid 55% of it to the team that went out cleaning. And now we've got 45% of it left. And we have to decide how much of that we're going to take as an owner and how much of it we're going to invest in marketing and spend across the rest of the overhead of our business. So the first one that we spend money on typically is the marketing to keep growing the business. In general, we've got 5% geared towards marketing. But if you really want to get aggressive, you might even push that to 10 or 15%, depending on how fast and aggressive you want to grow. So there's a few different places you spend marketing money. One might be cleaning for a reason or some other charity. And so there's a line item in here for a charitable donation. That's still building your brand and you expect it to potentially have a return for you. So it still falls into marketing. You might not have like a specific acquisition cost tied to it. Like I spent this much, I expect to get this many new clients from it, but it builds your brand. And so we put it into the marketing bucket. You're also going to have some infrastructure in your website and software geared towards helping people find you, maybe like Responsibid to help people get pricing from you without having to interact with you. So you're going to have some infrastructure costs there. We've got 0.5% built in based on your revenue there. The big ones that you expect to get a return on are ad spend and awareness spend. So Google ads, Facebook ads, Home Advisor, Thumbtack, anywhere you're spending money and like gearing towards trying to get a customer, a lead to find you. That's where your ad spend would be. And so we've got 3% geared toward that. The other bucket that you expect to get an immediate return on would be the labor that you're using to do different marketing things for you. You might be paying somebody to do social media for you. You may be paying somebody to do your Google ads for you. You might be paying somebody to do SEO stuff for you. That bucket is separate. We break that labor out, that professional labor out. But again, we'd want to get a return on that money. So in total, 5% on those marketing areas. And this, you can, you might say, I do all my own marketing, so I'm not going to pay anybody to do it. The override didn't work. Got to fix that. I'll fix that before you download this. Anyway, and maybe I'll switch this to 4%. That override worked. I'll have to figure that out. That one worked too. All right. Got some fixing to do. Moving on. So anyway, that component, you can kind of just dabble with those overrides as you want. You can also use the sales and marketing tab. And again, if you toggle this on, it is going to pull those numbers in here. So that override is at least working. So you can see it pulled numbers in, and it says see that S&M tab. And now these percentages have changed because I'm pulling in the numbers that I entered in here instead of just the generic percentages. So again, here's the actual section to enter the actuals, which will then be compared to what the budget has there. And moving along, we've got admin costs. So admin's going to be anything that like happens in the office and is geared to, so if marketing is to get leads in, admin is to convert leads into clients and take care of them once they're clients. It's mostly labor. We've got 13.5% built in here right now, and that's assuming that you're taking a wage. If you're not taking any wage at all and you're just taking distributions, this should be more like 5 to 7%, I would say, depending on who you're paying and how you're paying them. So right now it's based on you taking a wage and performing administrative services in your business. If you're out in the field, you should be cost of goods sold. If you're in the office, you should be admin. If you're not even working inside the business and you're just more of an owner and you're not even taking a wage, you would just pay yourself with distributions. So there's a lot of different ways to pay yourself. Go check us out on Bookkeeping Beer and BS because I talk about that every once in a while, the different ways to pay yourself and make sure you're doing it right and smart and tax effectively. But this is assuming that you're taking a wage and you fall within the admin bucket. You're not out in the field cleaning. So 13.5% there. Again, that's the wages, that's the taxes, that's the bonuses. There's a line for owner's salary if you want to carve yourself out, but at the end of the day, at this point, you're just an administrative employee here. So you just roll up into that same bucket. So I didn't carve out how much you would pay yourself. That depends on the replacement cost of the work that you're doing and how much you would have to pay somebody else, whether you're an S Corp or not, all that stuff. So if you want to dive into that more, check us out on Bookkeeping Beer and BS, or just hit me up and we'll dive in. Some payroll expenses, like if you have ADP, Sure Payroll, QuickBooks Payroll, whatever you use, you're probably paying a fee for the software, the system, and them to file the taxes and stuff for you. So some expense carved out for that, some expense carved out to hire a badass bookkeeping person, some legal services, just a little bit of fluff in there just in case. That's probably going to be zero most months. And I even put a note in here, let's hope that you don't have legal fees, but you might. Some business consulting money set aside to make sure that you're getting professional help through CBF or wherever you're getting it. Probably CBF, obviously, if you're watching this video. Some bank charges, they always have those like analysis fees or whatever. And then maybe like 1% for office supplies. I think this one you should be able to beat. It's just a nice tasty round number to get us to 17%. But you can probably beat that office supplies and do better than 1% there. That would just be anything like pencils, paper, printer, computer, stuff that you need in the office. And then again, a section to enter the actuals. So now we've got 3 different overhead buckets in the CBF model. We have job-related overhead costs, we have necessary overhead costs, and we have discretionary overhead costs. So each one is like around 5%, I'll say. Job-related costs, we have at 5%. Customer damages and repairs, when you're out in the field, break something, you owe a customer some money or however you handle it, it's going to happen, right? So we budget 0.5% for that. Merchant fees, every time you go out to do a job, you expect to get paid. There's a cost to getting paid, whether you're running around and trying to do deposits, or you're paying somebody to run around and do deposits, or you're paying a credit card processing company to do it for you. We've got money in there for that. Supplies and materials, the stuff that the cleaners are using to do the work. And then uniforms, if you're, equipping them with safety PPE right now, but shirts and all that stuff. So about 5% on the people that are out doing the work. It's not on their wage per se, but it's other costs that go along with having them out in the field that you're going to pay to make sure that they can do what they need to do. Again, and then a separate section to enter the actuals there. Necessary overhead costs, we view as stuff where it's typically hard to get out of, or at least hard to change. And it's overhead that it's not just reactive, it's usually proactive. You're thoughtful about how you spend this money. One would be insurance. You're going to try to contract good liability insurance or auto insurance if you have a company car at all. Maybe not for your cleaners, but for you, for a salesperson or something like that. Recruiting, you guys know this if you know Blue Skies at all, but we're huge on being very aggressive on recruiting and making sure that you have an awesome team. If you're running this is about what we would spend if we're running a $500,000 business. We'd better be spending at least $1,000 on recruiting every month, even if we don't need people. There's just no substitute for A players. So definitely make sure you're budgeting enough for recruiting. Rent and lease, having a space to rent, depending on the size that you are, you may toggle this one. And then the other would be software and utilities, phone, internet bills, and stuff like that. This is definitely a bucket where some of these expenses aren't going to flow based on your revenue. So in general, the target's there at 6%. But again, you might say, like, I know my insurance is $800 a month, and that's just what it is. And I know what it's going to be. It's not necessarily a percent. It's just going to be 800. And I know my rent is 550. And so you would just punch those numbers in, and it would override what's in here for the target budget. So this is an area generally you'd want to override some stuff. Same with utilities. You might know that you're going to spend closer to $400 a month or whatever it is. And then the percentage is based on revenue will adjust at the top. And your target here is now 6.3 instead of 6. And these, when you enter actuals, it'll compare against the 6.3 and how you're doing against your budget. I'm going to delete those out. Boop. Okay. Last bucket here, discretionary overhead. So we have a couple percent in here for this one. It's not about the different line items in here as much and how much you spend on each one of these line items. This one's more to just like managing to the overall bucket, and just trying to make sure you're not spending willy-nilly. I'll say that you're frugal and not too much money is going out the door on these discretionary things. So a big one would be education, events, and leadership development. Obviously, we want to go to events. We want to sign up for stuff. We want to go learn and get better. And those are like reactive things. Something comes up, there's an opportunity to go do this thing, and we just got to decide if we're going to do it or not. That's the majority of this bucket, and that's usually a good investment. But again, it's one of those things where you just got to make sure that you're going to get the return on that investment to go do that thing. A little bit for meals and entertainment. Most meals and entertainment stuff are personal, and it really wouldn't hit your business books anyway, but a little bit carved out there. Employee engagement, obviously super important in the home cleaning industry. To have an A team, you need to keep your A players, and you got to keep them happy. And so it's worth spending a decent amount on employee engagement. So we have a decent amount set aside for that. And then travel and travel meals. Like, it's not going to land evenly every month. Obviously, there's going to be like 2 months in a row where you have zero, and then 1 month where you go to an education event type of thing. But I don't think it's worth being precise based on the month that it happens. You're more managing to this percentage over the year. And like I said, it's not about which line item it lands in. It's that in total, you're staying under that 2% threshold and managing to that. And then again, a section to add the actuals. And now we have our operating profit. So one thing to point out here is there's your operating profit budgeted, and then there's your actual, and then here's your cash-based operating profit. So what I mentioned earlier is we're typically looking at the accrual because we want to know how the expenses compared to when we did the work. However, cash is super important still because that's what we pay our taxes based on. That's what we pay our income taxes on. So it's going to generate both of these. And that's why it's important that you enter both types of sales at the top. Now, you'll notice in the 4 payroll months, January, February, March, we're planning on making a 15% operating profit. In the 5 payroll month, we're losing money. And mathematically, that's super okay, and that's what you should expect. We're still, if we go to the end of the year, we're shooting for 10% profitability. And again, this is with you taking a wage. So you've already taken your wage for doing your work within the company. That 10% is now for you to take as an owner or for you to reinvest in the business and put it back into marketing. But you'd expect to earn about 10% profit margin on a home cleaning business, assuming you're paying somebody to run the business, whether it's yourself or somebody else. This 10% is really for the owner. And then as the owner, you decide if you want to reinvest in the business or take it out and invest it in a vacation or something. So that's our operating profit. Now, there's two other sections down here. And if you feel like diving in a little farther, you can use these. So one is for tax purposes, pulling in your depreciation and amortization. In a home cleaning business, we don't have a lot because we're not a very asset heavy business. We don't have a ton of vehicles. We don't have a ton of equipment. That is over 2,500 that would get capitalized on the balance sheet. But maybe you bought somebody else's business and you have some goodwill that you're amortizing from that. Or maybe you have a company car that you drive and you put it on the company, and so that gets depreciated, which would be really smart to depreciate that, because as a human being, you don't get to depreciate your assets. You just buy them and you don't get a tax break for them. As a business, you buy an asset and it reduces your taxable income. So you might, use your vehicle mostly for business use, run it through the business and depreciate it. And that would go here. And it can feed from this asset and liability tab. That would be for stuff that you own and stuff that you owe. And that will, again, there's a place to toggle that and feed it in with the little use section here. I won't dive too much into that. Go check out the other videos on these different tabs if you want to dive into that more. But anyway, this would help you understand what your income is for tax purposes. And then down at the bottom here would be your cash flows. So depending on how much wage you take and how you take that wage, a lot of people don't pay themselves through payroll. They just take distributions every week or every 2 weeks or whatever. And if you're taking it as a distribution, it doesn't hit your P&L. It still leaves your bank account, but it really just leaves the equity section of your balance sheet. And so you can budget for what your distributions would be if you're paying yourself with distributions. Likewise, if you're contributing money back into the company and putting some cash back into the company, there's a section to contribute money in here. Any other cash outflows from down payments or principal paid on loans, and then any other non-asset related loan payments, cash inflows or outflows from that. So anytime cash is coming or going from the balance sheet, it's not going to hit your P&L. If you're paying loans, if you're taking money out of the business or putting money back into the business, that doesn't hit your P&L. It's not going to be in your earnings. It's not going to impact taxes per se, but you still may want to know what your cash flow from your business is going to be. And so you don't have to fill this section out, but you might want to. So it's in there. Again, there's separate tabs for sales and marketing, payroll, assets and liabilities. Feel free to dabble with those, and you can fill them out just to like gain perspective and understand your business a little bit better. And even if you fill it out, you don't have to toggle on that use option. You can just keep it there to inform yourself. Or if you really like the way that it lays out and it makes a lot of sense to you, then flip on that use, and it's going to pull all of that data right back in here to your budget. And then if it doesn't come in the way you want it to, or if it's not working or whatever, just turn it off. Like payroll, for instance, you might flip it to use, and clearly like payroll can get pretty complex depending on how you pay people, if they're teams or if they're solos, like all the things. If you flip it on, it's gonna pull over into the payroll line items here. So you can see it says see payroll tab. There's zeros, so nothing's actually coming in here because it's really confused because everything is a zero. But you can fill it out, and then you can always deselect the use. That's it. I will. So I need to go fix this marketing override here. I think it was this one, wasn't it? Well, that's not going to work. It'd have to be like 0. So I've got to fix that. I'll fix that by the time you download this. That's it. If you need help with your bookkeeping or your budgeting or whatever, go check us out, yourblueskies.com. Find me on Facebook, Bookkeeping Beer and BS. We do a show almost every Wednesday, except today is like the Wednesday before Thanksgiving. So go party instead, or hang out with your family. So that's it. Go check out the other videos for the other tabs on here. Go get your target budget spreadsheet. If you're just watching this video on YouTube and you didn't get the target budget spreadsheet yet, go make sure you get it. That's about it. Have an awesome day. Let us know if you need help with your bookkeeping, your budgeting, whatever you need help with on the finance side, and we'll see you on the next video.